Alrighty, hello folks. I see a few are jumping right in here on us. Welcome to my desktop. So we get started here with Trade Ideas Live Q&A. Open forum here, folks. I don't have any pre-done content, so really rely on you folks to drive the content with your comments and questions. We can take it away from there. So please don't be shy. Get those questions in here for me. And we'll get those answered the best that we can. Of course, if there are no questions, I'll do what I can to keep this engaging and informative. But again, as I often like to say, I cannot answer the questions that are not asked. Come one, come all with the questions, please. Is there a way to track IPOs? You can do a halt resume alert, really just a resume. So if you come to an alert window, I would have no filters. Don't have any filters, any values in here, and search the resume and add that alert. All right, and IPOs will show up as a resume when they start trading, and that's really the only way to do it with our software. You could, as a workaround, I think that's called IPO Scoop, is a website. You could look and see what's coming, and you can bring up that chart and set a price alert on the chart for, it doesn't matter what the price is. And when the stock starts trading live, the price alert will go off saying, hey, price alert's tripped because the stock came live. And those would be the only two ways to do it. One of the things is our data our scans rely on data from prior days, right? Outside of a new high, but there's, lots of stocks will make a new high on a day, not just the IPO. So when it comes to the filters, this is comparing volume from the past and comparing volume, right? You need to have, a baseline for volatility. These aren't going to help you because any stock can do any of these things in the range and so on and so forth, right? So that would really be it as far as the IPO scene goes. And again, don't be shy, everybody. Keep the questions coming. Some interesting movers on the market today. The market moving itself. A second day bounce here in the overall market. QSG, definitely not an easy trader. Grinding higher on the day here. But some pretty sizable moves here. These topping and bottom shadows and all that stuff. CSAI, another one. Pretty all over the place. Definitely some tradable moves in there, but these are the kind of stocks. These are the ones that lure people in, and having a trading plan with this stuff and really being able to execute that is the only way for success with this kind of stock. And someone will be like, "Well, what do you mean?" And you think about this, right? Sure, it's up, right? But it isn't just straight up, right? You get this move up and move down and a move up and the sideways grind with these little moves up and moves down on that big sideways grind before getting and giving some of it up and getting a move up and giving some of it up. And it's not like when it's giving it up, 5, 10, 15, 20 cents. We're talking, 30, 40, 50 cent moves back down from, here to here in just a couple of moments. So just those very tough traders and having a plan to be able to get a piece of some of these things is really the key on that. Can we look at RL? Sure, RL. Ooh, okay, I typed RL, but sure, put in whatever you want, chart. Ralph Lauren. So yeah, it's got a bounce here with the rest of the market, but it really sold off like the rest of the market too. I mean, this looks very close to the NASDAQ's chart actually, or the Q's chart, right? If we look at this versus a Q's chart, look at how my lines are gonna. Okay, again, just whatever you want, chart. Unbelievable. I mean, really close. The Ralph Lauren chart and the Q's chart. Now, the Ralph Lauren RL is traded on the NYSE exchange, not the NASDAQ, but all the same. So you look like you're very tied to the market at this point. So I would be, this is one of those moments where, you're going to want to make sure that you're protecting your profit, right? And have an exit plan, both if this continues to move up or if it pulls back. You don't want to let something that you're $6+ into the money, $7 into the money, get back too far down on you. Unless you have some reason to believe the market's just going to bounce at this point and continue to move up. Obviously, at that point, you have a trading plan or something formulated already that you'd be following at that point. When you look at here at this year chart, again, up and away with some minor pullbacks here, and then you got this correction that went on here. So I'd definitely be protecting profits on it if I was in that position. But everybody to each their own on the trading plans. So that'd be my 2 cents on RL. Excuse me. And keep the questions coming. Come one, come all. Anybody at all with questions, don't be shy. Please get those questions in for me. I would note this. This is the first day in a while I've seen this happen on this compare count window, that the 30-day new highs are nearing the 30-day new lows, even on some of the past days here. Wow. Software really doesn't feel like working today. All right, well, looks like I'm about to crash. Yeah, awesome. Bear with me, folks. My entire everything is locked up. Hopefully I didn't lose you all. Well, that sucks. Just lost everything on my races that I wanted to go over, but that's okay, right? Hugely frustrating. whatever. Lost my train of thought. INDO. Sure, we could look at INDO. There's not a whole lot here. I mean, the thing is, it's a pretty liquid stock, 94,000 shares traded at this point. This is one of those energy stocks that, you know, it's a low floater, and so people pile in on it, and you get days like this with it. So there's a whole lot to really say on this. I mean, you can look here on this picture-in-picture, you know, doesn't seem to get back up quite like it was. I think we hit the Wayback Machine. I had some other big ones here. Yeah, I remember this. But we can see here, you know, downtrend, not a whole lot on it. Oh, INOD, sorry, don't mind me. Yeah. This is a different tale here. You know, 500,000 traded on it on the day. Not a crazy liquid stock, but certainly not illiquid at this point. So it probably gets up near a million, I would surmise, by the end of the day. It's not bad. Market dependent, though, I would have to say, for the most part. I mean, we sold off this. The market sold off. This is sold off. This isn't really quite bouncing with the market at this point. I might be looking at with that. You have this move up here. We'll pull back and move up into that. So you really want to hold on to this area here, because if you give up this area here with any significance, you're looking back down here in that 20 range, to be honest. You know, whenever I see the data processing stuff, I just figure it's going to have some kind of AI relation to it or something like that. And so, you know, like these other AI stocks, AAOI, IONQ, I think is one. Yeah, you know, these all have kind of a similar feel to them. So you're going to want to see that come back into play here, that theme. I got to say this, you know, up 3,300% in 5 years. Not too shabby for anybody that's been holding that long. I'm sure there must be someone out there. ECORZ is like another one that's related to that, right? So kind of a similar theme here with all those kind of data stocks. I mentioned yesterday, you know, cloud computing. Is it cloud? Yeah, cloud computing, the ETF here. So I would suspect that it's a good chance that maybe those stocks have some tie into this, whether directly or indirectly. You'll want to see something like this get going again. While yes, it's thinly traded, you know, they're all kind of interrelated in that. Bought at 3. So yeah, I mean, wait a minute. Have you bought this at $3? I mean, you're sitting real pretty. Also, I hope you sold some out in this area here. I mean, generally nobody gets that, but you got pretty close to that. So, yeah, I don't know what your situation is with it, and if it's a long-term thing, if you have involvement in the company or anything like that. But I mean, even with the move up and sell off, you're still sitting real pretty with that, I would say. That market pulse graph, is that buyers versus sellers? Kind of. It's highs versus lows. So this is 30-day, including weekends, 30-day highs versus lows. Of course, this isn't a good look at it now because I restarted, so it lost the whole day's data. So it's a poor representation of what it is at this point now. So you can't make anything out of this data anymore. This is all scrapped and garbage at this point from crashing. But the idea is, you know, are we more to the upside or more to the downside? and on the highs versus the lows. Doesn't necessarily have to be buyers versus sellers, but yeah, I guess, we could call it that. And we can go over real quick. Let's come to the configure. And in the green data here, we're looking at stocks making, as I said, new highs, and I got a 30 there. So it's got to be at least a 30-day high to get alerted. And then you have a market cap of, what is it, 50 million? Yeah, 50 million or higher. The price has got to be $5 or more. They have to trade at least 250,000 shares on the day, and they have to trade at least 75,000 shares average for the last 3 months. So, I'm trying to include a large world of stocks in it while excluding maybe some of the things that really, really have no impact on the market whatsoever. And then the flip side on the red data, again, new lows, and it's got to be a 30-day new low with weekends included. And then on the filters, they're just the mirror of each other. 50 million on the market cap, $5 price floor. Again, 250,000 shares traded on a day and 75,000 average over 3 months. I would, drill in a little bit here. Can't do it with these charts, but I can't use the other charts. So, I'm looking at this here, bang, 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 right? So I'd want to be holding here, because if not, you got this gap here to fill, right? Below that candle is 29.67, and the high of that candle, I can get it, is 25.24. So you got a $4+ gap here. If it gives this up and gets to the bottom of that candle, you got a $4+ gap on top of that could fill. I'm not a fan of giving back profits to the market, quite personally, but everybody hopefully has some kind of plan when they get in the stock. And if it goes up, this is my plan. And if it goes down, this is my plan. I would say if you don't have a plan now, make one and then stick to it, right? There's nothing you can do about the time missed without having a plan, but you can do something about having a plan for the future. Sold most, looking for a reentry. So, this could be a bounce area to build off of that core position. If you still have a core position from that low range there, you're going to need the market on this, though. This is not, unless this has some news release. If you're anticipating a news release or some kind of deal, acquisition, merger, any kind of news that obviously is never going to be reflected in the chart ahead of time, it's going to need something to do that. And obviously there's no way to predict if news is going to come out on this thing. And there's no way to predict the reaction to the news, right? We've seen positive news come out for a stock and it moves down, and we've seen negative news come out for a stock and it moves up, right? So for the footprints in the sand and the price action on this, that's, kind of my 2 cents there, that this is an area you want to see it dig in, but it's going to need the market without a question. No market bounce. Going to be a problem for it. Is there any other graph that represents market sentiment? Any other graph? No. Not in trade. Yeah, you're welcome. I can't think of anything else specific that would, this would be it. You could look at sector scanning, right? Like, we could bring over the sector scan here. Yesterday when we were first looking at this, we got a bounce that really didn't take off till after we had been here together, or took off, quite a bit more after our session here. There's more red here yesterday, or less green for sure, and more the light green and white yesterday. So, I'd be looking at something like this as well. How much green are we seeing in here? And what are we seeing in the green? Like, I mean, pot stocks being green, nobody gives a shit about pot stocks, right? I mean, it's going to go down as one of the worst investments of all time, long term, anyways. Clean energy, nobody gives a crap about clean energy. I mean, look at that chart over 5 years, right? So, like, these being green mean nothing to the market, right? Uranium has some impact. Obviously, retail is going to have some impact. Um, Oil services make a difference, right? But I'm looking at this whole thing overall, and there's not a whole lot here. Nobody cares about solar stocks, and anybody that tells you they care about solar stocks, they don't have any skin in the game, or they have a lot of skin in the game. Either way, but look at this thing. Over 5 years, it's up 2%. So not good, right? So I'm looking at this right now. That doesn't give me a lot of conviction what's gone on today, to be honest. And while I see, yes, the SPY is moving up and away right now, solar stocks are not going to take this market up. Not right now. Pot stocks are not taking this market up. Dry shipping, clean energy, nope. Right. We did talk about cloud computing. Again, it's a small niche area of the market, right? So, if we look at the things that really matter right now, technology is floundering. It's got to bounce, right? But it is under pressure right now. Still, technology is what matters right now. Home builders, what matters right now. Yet these things are up. Don't get me wrong; they're up today. They're seeing a 2-day bounce as of now, anyways. But keep them in perspective where we see how much green and where that green is. Those darker ones up here, not quite as important. These ones down here, a lot more important. Communication sector, I think that is important, right? So that's the kind of stuff that I'm looking at. I know I pick on things, but I can't help it. Character defect of mine. My biggest thing is this, like, I came across people years ago that, like, weed was going to change the world and everything like that and all this stuff. And I'm still waiting on it. Like, I don't have any problem with it. Like, it's fine. Smoke some weed or grow it, sell it, whatever the hell. I don't care, but it's clearly not changing the world. Solar energy, this is it. It's going to be life-changing for everybody. People ain't betting money on it. It ain't changing nobody's lives, right? So I just always find it funny. People sink so much effort into something, and the footprints in the sand are here for us, folks. It's really clear. Nobody with significant money is betting on solar stocks. Nobody with significant money is betting on clean energy. Nobody with significant money is betting on weed. And I do mean nobody, right? Can I explain the racing window? Sure. So it's a top list at its core. We'll open the top list here and take a look at it. And so I programmed the top list to say, show me stocks that are between $2 and $30. They've got at least 400,000 shares traded on the day. They got to be 85% above the lower Bollinger Band. So I'm trying to find stuff with momentum moving up. And then I've got a volume filter in here just to make sure the stock's trading throughout the day. Once it finds those stocks, I've told it, if there's a lot of stocks, I want the ones that are up the most from the open. If there are a lot of stocks that meet these filters, I want the ones that are up the most from the open to be at the top, or to be the first ones on the scan, right? And then inside, that's that, right? And then inside the race, I told it, I want the ones that are up the most from the open at the top, and I want them sorted in descending order. And then I want you to run them on a total accumulation of being up from the open, meaning that stocks that are simply up the most from the open and are moving more up from the open, I want to see those winning races. And then I broke it down to 3-minute races. The original thought behind it was I used to use 15-minute charts a lot. So it was 5 races per 3 minutes, right? Giving me that 15 minutes. And I just left it like that. I don't use 15-minute charts at all anymore. I've left it at 3 minutes. I'm happy with it. I don't have any issues with it. So that's what I do with that. That's you know, and I've got it set so I only see the top 10 stocks in it. I don't need more than that because anything below this isn't moving in a significant way that I'm going to be interested in trading anyways. And so there's no reason for me to have data there that I simply don't need. One, it takes up bandwidth on my machine, and two, it takes up bandwidth in my brain, right? There's no reason to allocate, you know, resources, whether it's my mental capacity or my computing capacity, to things that are not benefiting me in any way, shape, matter, or form. So it's just another way to look at topless and the way things are moving. You know, you can't really see the movement that's going on here with the top list in a grid like this. And so it helps me focus a little more on that. And then I like the, you know, the finish line over here. Creates a nice watch list throughout the day. I can set price alerts on stocks, you know, so let's just say something's won, you know, 4, 5, 6, 10, 15 races and it's pulled back. Well, maybe I see an area where on that pullback, if it recaptures, I could be interested in taking a shot at that again and setting a price alert for it. Unfortunately, because the software crashed on me before, I lost my watch list over here, so I don't have anything to point to it like that. But let's just say, for example, TCRT. I'll just make an example here. Let's say it pulls back, you know, just below $2, right? And then I say, you know, well, it's just below $2, but the volume has stayed in it. It's people are interested still. It's hovering at $2. And then I say, all right, well, maybe if it can recapture that $2 and the VWAP's around that $2 and it recaptures all that and the volume continues to pour in it, maybe I consider a reentry at the $2. And so that's what the watch list is nice from that as well. So those are the things, those are the reasons why I use the race, why I like it. But it's, you know, everybody has their own preferred way to digest data. That just happens to be mine. You know, other folks, they prefer the time-stamped alert to alert windows. I don't really run any alert windows at this point. I don't really do almost any day trading at this point. Everything I'm doing is swing trading when I am taking any positions. And so, you know, alert windows, I don't really need them for, you know, when I'm swing trading, I'm, you know, taking my time to analyze things and get into stuff. I don't need a time-stamped alert to rush me into something or rush me to look at something and consider it. I can sit back, go through the windows slowly, look at the stocks, set up plans, set up if then scenarios. If this stock does this, then I'm interested for these reasons. And if I'm interested, these are my plans moving forward. I can take my time to set that up versus, you know, something like TCRT. You know, you got to be in a rush with this thing, right? Like there's no messing around. 1.3 million in that float. And, you know, this thing is turning on a dime left and right here, up and down. So good questions, good stuff. Everybody appreciate the interactions. Keep them coming. Keep the questions coming, please. Don't be shy. So, yep, don't be shy, don't be shy. So, you know, we talked about a market bounce right now. Got a little bit of a bounce going on. It's getting a little wobbly up here. I don't think that's any surprise given, you know, moving up towards the top of this candle here. We had that sell off on Friday. It's got, you know, going to be some work here, and it's always funny how this works. You know, we talk about, well, it's got work to do to get through some areas. You know, if it can kind of recapture and reclaim this area here, and then we start to look here, and then I think we start to look here, right? Sometimes, you know, it's like chops, and then boom, just took out 2 of those levels, right, on us. That's where, you know, being prepared and nimble and, you know, willing to enter something on your trading plan and stick with it. That's where the edge comes in on all this. That's where the edge comes in. So if there are other questions, don't be shy, please. Here's what the diamonds look like because they looked less bad than the rest. But yeah, look at that. Struggling at yesterday's high, right? So, I don't think these things are coincidences. I think, our largest players out there that really move the markets are all kind of sitting around and waiting to see what's going to happen over the next couple of days with, I think there's like some tariff news that's supposed to be coming in a day or three. I don't know exactly when. For those that were here yesterday, those that know me, I don't care about the news. It's a bother to me, in fact. Just, each day I'm going to react according to what I'm seeing in price and volume and trends. And right now, we don't have an uptrend anymore, right? We've lost that uptrend for a while here. We're chopping sideways. We're grinding a little bit lower on that chop sideways. And so, a few things that I enter, I'm in and out of pretty quickly. So again, don't be shy, anybody. Don't be shy, please. If you got a question, put that in the panel for me. What else could we think about and look at? Oops, where'd that window go? Where'd who go? Oh, there we go. Is the go no go indicator and trade wave basically conveying similar information? I mean, they're both looking. That's what they're looking for, right? So I mean, here's a go no go. And so it's looking for trend and then length of trend and confirmation of trend and things like that. So you got this thing down here and it starts to bounce and it goes from an absolute no-go to a kind of no-go to a pause to a kind of go to a go. And then it sells off, starts to go back into a kind of go again, right? From here to here. That's where we're at. If we look at it as a trade wave, it's looking at this 9 EMA cloud crossover. And so we get the crossover on that here and we get the buy signal. It's there. We get the crossover on the downside and we get the sell signal here. So they're both just looking for trends and changes in trends. I would say that because I don't the go no go is under lock and key. What the filters are, what the indicators are. It's a group of a bunch of indicators that make up the go no go. That's proprietary. Nobody knows that except the people that created it. One Mr. Tyler Wood and his partner Alex, the CMT Association. So that's their brain. That's their brain genius. That's their brain baby. I would say that just sheerly looking upon these here, that the go no go is a little slower to change to either side for the most part. So it's waiting for more confirmation. Trade wave is waiting for less confirmation, and it's kind of just jumping right on it. And someone I'm sure is thinking, well, which one's better? And it's not, right? There's not better on these things like that, right? Some things just are. They're not good or bad, right? And I tell this to the kids that I coach softball all the time. It's not better or worse to be a pull hitter. It's not better or worse to be a opposite field hitter, right? They just are things. So, things that move faster, sure, it could get you the buy signal earlier, right? But it gets you a reversal on a sell just as quick too, and you may not want that, right? So we get a buy here, and well, what if this shows a sell here and it bounces right away, and we sold here, and now we missed out on all that because of that. Where the go no go, it got us the buy here, but it kept us in here and kept us going, right? Vice versa vice versa. What if the go no go is still got us as a buy here and it doesn't get us a sell till down here, and then it keeps going after that, right? And so then because it waited longer, we stayed in the trade longer because of it. And so they're trend following indicators. And I think they're very good for people that have difficulty discerning trends, don't have any trading plan whatsoever. And you could formulate a trading plan around it, but certainly not a end all be all, follow this and I'm going to make money. That indicator still doesn't exist yet, unfortunately, because I would sure like it if it did. PASS, that was looking good, or PAAS, excuse me. That was looking good a couple of days ago, no? No, I guess it was the week before, week before last. Felt like I looked at this sooner than more recently than this, but I guess not. Yeah, I mean, you look at this chart here. You got all these, crashing out, right? Looks to be a bottom for now. Looks kind of trending up off that bottom after that initial push in that channel right there. So it looks decent. Not having itself a good start to the week, obviously. I will say that the miners, nowhere near the metals or the indexes of the metals themselves, like GLD. Yeah, sure. Look at GLD up and away like this, but look at GDX. Come on, man. GDX, nowhere near that, right? GLD was up and away. GDX is chopping all over the place. And while, yeah, it's up here now, it did not take the path that GLD took whatsoever. My go-to scan, it's this here, my evening update. How do I trade it? I look for charts that look like this AFLAC chart, as a matter of fact. I like to see stuff like this. And, we're trending up. Maybe we had a bit of a pause, and we look like we're ready to go short term again here. That's a beautiful looking chart right there. Very beautiful looking chart. So I'm looking for charts that look like that. There's not going to be a lot of stuff that I like on this, I'd have to imagine. It's all right, but I'm not overly crazy about this. With this up here, looming up above it like that. The other thing is, we're not, I'm looking for stuff that's, trending up or, trending off the bottom and up again. And, we're not going to find a lot of stuff in this market here. But what the scan does, if I come to the configure, and we look this here, we're looking at stocks $11 or more, traded 750,000 shares on the day. They've got to be 75% above the low of the 20-day range. So I want to see them trying to break out over the last 20 days. I want them in no man's land. Or I want them at least attempting to leave no man's land to the upside. Got to be 75% above the low of today's range. So I want to see stuff that's on the upper quarter of today's range, and then a relative volume of at least 1. And that's what I'm looking for with that. I used to use this. I went over this earlier, and I used to use this as a day trading scan. I'm just not really day trading at this point very much. I don't have the time to day trade. I'm answering user emails and chats all day long, and day trading requires your full attention. I don't know how Barry does what he does, that he can trade and answer questions in the room and everything like that. The only way I can put it, he's a special person like that. That's it. He's also been doing this for, I don't know, 5 times as long as I've been doing it, probably at near 5 times as long as I've been doing it, 4 times, whatever it is. I don't know. Barry's been doing this for 20 something years. I've been doing this for 7. So, 7.5, but it doesn't matter. It matters that much time. So that's this was my go-to when I was day trading, but like I said, just not really happening at this point for me, unfortunately. I do like also for some of my scanning. Searching my cloud, and I'll just put a link of this in here now to save anybody that looking for a copy. Let's call it position lifetime range scan. And on this, I'm looking at stocks that are $8 or above, trade at least 1 million shares on the day, relative volume of one. They got to be 85% above the low of their lifetime range. And I look for stuff that's towards fair. Use the scan for two reasons. One, what's on here, how many stocks are on here, and two, what looks good on here, obviously. That's where charts go. When you're looking at, look, gold, this is just a nonsense stock. Gold, insurance, I think gold, right? Yeah, gold, 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 silver, right? I think you guys get the point, right? When this looks like this, sorry, this is low volatility fund, low volatility fund, low volatility. When you get the top of the scan looks like this, that's not a bullish environment right now, looking like that. So I use this also as a kind of a weather bell for the market. It's not really a way to chart it, but when you're not seeing any value or growth stocks really doing much of anything on this whatsoever, sitting near all-time highs, clearly the market is not being bought at that time. That's sorry. As we come down here, we're going to find some stuff that might, look, SPY is 13% off an all-time high like that. 12+% off, I should say, not quite 13. So, we're sitting down here in correction territory with the SPY. The Qs are on here. There's a diamonds. I just saw some. Yeah, there's the diamonds. Sitting 11% or so off all-time highs. So, it's a good way for me to get a quick view of, what is holding up in this market. And when, it's precious metals and mining that are holding up in this market, and people just aren't putting money to risk. That's all there is to it. And if the smartest money out there isn't putting money up to risk, I need to ask myself, should I be putting money up to risk, right? Continue to see the sell-off going on here, giving some back up here as we took out yesterday's high by just a little bit. Come back down into it here. So can it find some footing at this 560 area to build the base camp on and move up for the bulls, or the bear's gonna pounce and take it right back down? That is the question. Those are my kind of go-to scans. I'm a very simple user at this point because I'm a simple trader. A long time ago, someone told me if your trading's really exciting, you're doing it wrong. I didn't understand that for a long time. I understand that now. I like my trading to be boring, as boring as can be. I don't want any excitement in my trading. I don't need my heart racing. If your heart's racing when you're in a trade, you either or share size too large, or you have no plan or no conviction in your trade. Either way, if your heart is pumping when you enter a trade, you need to examine why you're in that position. SQQ. Yeah, so look, as I just said, SPY showing some signs of selling off, and so we can see that also the NASDAQ and the SPY, they're pretty closely related. The Qs and the SPY, and we can see this inverse fund here, starting to pull itself up here. So, we got the inverse sell-off funds accelerating to the upside, and we've got the actual indexes starting to accelerate to the downside a bit here. And it was just the market does not like uncertainty. And when I say the market, right, the market is made up of people. Now, there are some people and entities that are run by people that matter more than others for weighting purposes. And as human beings, we do not like uncertainty, right? So, with all that uncertainty, the market said, all right, well, there's a lot of risk out there, a lot of headwinds. We're going to start moving out of positions. We're going to start reducing positions, and we'll play some wait and see. And as nothing positive comes in to clear up any of that uncertainty, well, we'll just continue to reduce more positions. And that's what we've seen over the last 3+ months or so. And it wasn't met with just one violent sell-off, right? We're really grinding and making all-time high. We're really grinding and made this all-time high. And then, those uncertainties, those concerns were not addressed in a way the market was accepting of it, the way the people that really run the funds, the big players out there, so what did they do? They said, well, we're reducing risk in positions, right? Now we're sitting around down here. And unless this resolves in a positive way, we're either sitting down here, or if it resolves in a negative way, start visiting this side again of things. And, market, a lot of psychology in the market, a lot of psychology, people. Like, why does technical analysis work? Because people work, right? People like whole numbers, they like even numbers. We like multiples of 5, right? I always, something I say in these live streams. When was the last time you took the volume of your TV and set it on 13 or 17? I'm sure there's someone out there who'll be like, oh, I do that all the time. Yeah, well, okay, you're one out of like probably 10,000 people that would do that. So as long as there's this uncertainty, people are going to, especially technicians, they're going to look for these areas, right? And so it starts to become a self-fulfilling prophecy in a sense. And that's why, when you start to get up to these numbers of 500 and 400 on these bigger players here, you start getting everybody looking at them. Nobody wants to be the first or last on the bag holding. So, all right, we got a few more minutes here before I wrap up for the day. So if anybody has any questions, please do not hesitate. Get those in for me. Let's see. What else could we talk about? Not much to do there. This is another thing. Use any scan for different things. Look, reverse, or inverse. These are all inverse ETFs. Forget what this is. Yet another inverse leverage ETF. Right. So as we see some of these sell-offs start to, continue to move forward on the day here, we're seeing this kind of stuff in here. Here's another one, another inverse ETF short the Dow 30. So these are the things that have me saying, where am I putting money to work? Now, look, on the day trading side of things, if I was really a day trader, some of these inverse funds could be good day trading vehicles. I would never hold them overnight for decay reasons and things of that nature. But you're someone who's got to go long, you're not comfortable going short, you could consider some of these inverse funds. You just have to check with your broker, right? Not everybody's allowed to trade these. For example, if you have IB, you can't trade a lot of these without passing some checks. It was kind of, I won't call it a test necessarily, but it's not like you just say, "Oh, let me trade these," and they say, "Oh, yeah, sure." You have to have, your account needs to be at a certain funding level, your experience needs to be at a certain time frame, a few things like that. So, kind of interesting here. We said the retail was looking all right today. Here's Gap, and here's American Eagle. So they're still kind of holding up all right now. So, I like to point out things like that with, look, so much data you can discern from different scans. There's not just one way to slice the data that's coming out of them. And use one set of data to confirm another set of data, almost like our own Dow theory, right? In Dow theory, it used to be the transports confirmed a trend, right? You're in an uptrend, sustained uptrend, primary uptrend in the market, and the transports look good back in the day. That was your confirmation that the trend is intact and well to do. The transports look bad. You start looking at possible reversal and trend, short term, secondary, if you will. Well, you can do something similar with that all-time high scan. As far as more of the long, maybe the secondary trend, and within the intraday here, anyways, you can use this race as what's going on intraday with the actual market, and how that may play a role into what your own positions are at that point in the day, and trying to figure if you're risk on or risk off for the day, right? So one of the nice things about the software here, you can really think outside the box with some of these things, and it's not like some far-fetched thinking out of the box. It's a nice way to confirm. Yeah, so doing the CMT studies on this, and they use the small caps a lot now. Um, they use the Russell 2000 for a lot of confirmation. The interesting part of that, it doesn't always work. I mean, look, Dow theory is not infallible. I mean, it is a religion to the CMT Dow theory, but it's not infallible. And the small caps don't work quite the same, or I won't say as well, but they're not quite the same as using the transports way back when. And someone would say, well, what do you mean by that? And I would say, well, look, we had a bull market going from here until here, right? Look how much of that bull market the IWM was not in it for, right? The IWM was in the bull market for that little bit. And that bull market probably really started right about back here, actually. So you had all this bull market that the small caps had no rally in whatsoever, basically, right? And if we do this, let's just bring up the SPY. Or let's not bring up the SPY because this just doesn't want to work. We can see here, big difference in all this stuff. Look at that, right? We started rallying here. Here's the bottom, right? And the rally started really making a move through here. And the IWM wasn't a part of any of that move whatsoever. And the bottom was back here, right? Remember, I drew that little extra on there. So we had pretty solid bull run for, well, some people are going to tell you 2.5 years. Some people are going to tell you 3 years. Let them do the arguing, right, on that. But for the better side of 2+ years, we're on a very nice bull run without the small caps doing really anything, to be honest. Interesting. No data on the SPY, right? Yeah. That's just how it's going to go today, huh? There we go. Thanks for coming back, data. All right, so we pulled back a little bit. Now putting in a couple 5-minute candles again here. Also on the 15-minute chart, right? So, well, let's see what we can do. Can we get a rally can we get a 2-day rally under our belt today? Got to start somewhere, right? So another couple of minutes, I'll be here, folks. If you have any last moment questions, I would solicit you to get those in now, please. Don't hesitate. Don't hesitate. So TCRT, it looks like it was short-lived on that move for now. It's still up, obviously, significantly on the day, but you can see the volume is dried right up in that at this point. Let's see, RSLS. Wow, this thing is humming right now on the volume anyways. QSG. Yeah, we talked about this earlier. A tough one. ICCT. Another tough one here. Gold miners inverse, so the gold miners are selling off apparently. Yeah, I mean, they're the heaviest weighted on there, so yeah, they're gonna have the biggest impact. You know, your Googs. Boy. These charts just don't want to take typing commands from me today. So, you know, Google looks really not good right now. Amazon, not as bad looking. Okay. Meta, not as bad looking. Apple, bounced better than the rest so far. Sold off maybe a little more than the rest. No, that's not true. I take that back. Oh, what's NVDA, right? I think people are still pretty heavy watching that one. Grinding lower. See what it can or can't do. Microsoft don't look too healthy right now. So, yeah, you know, either, you know, someone else is going to have to step up to take the lead, or some ones are going to have to step up and take the lead, or these things will have to at least stop selling off for us to see any real significant bounce at this point. Well, we'll see. We'll see what happens, you know. Hard telling, not knowing, as the saying goes. So, all right, folks, we're butting right up against the top of the hour here. I'm going to wind it down and walk myself out for the day. As per usual, if you're not in our free live traders room, you're doing yourself huge disservice. Huge disservice. Barry's just, you know, Barry's the consummate professional, you know. So I would highly recommend. There's the trading room link. If you're not in there, I don't really understand why you wouldn't be, but if you're not, get there, right? I'm not saying be in there 24 hours a day and that, you know, everything that Barry does is the gospel, but I can tell you this for sure. You know, there's going to be few people better to learn the market overall or trading overall than Barry. So I'll throw that into the Twitterverse as well for those that are watching on the Twitter side of things. You can get in the room that way, by all means. And, you know, just keep an eye on these levels, folks. Markets never due to do anything, right? But let's be prepared. If we get a bounce, if we get a rally here, let's be prepared for it, right? You know, and if we're entering positions on this bounce right now, let's also be prepared that if there's a sell-off, we're ready to get out of this so we're not getting punished unnecessarily. We're going to be wrong. We're going to be wrong on these, right? That's the way trading goes. But the idea is when we're wrong, let's cut it and move on, right? That's the real key. So, all right. I thank you, folks. I will see you all next week. And you have a wonderful, wonderful rest of your week here. Take care, everybody. Bye-bye.